Welcome to Mukhlis Trading Academy, where smart trading meets real results. In today's video, I'll reveal the most effective strategy for news trading, combining real-time economic data with technical chart setups. You'll also see live trading examples to understand it practically. Understanding news trading. News events cause major volatility in the markets. Whether it's NFP, interest rate decisions, or inflation data, these moments create huge trading opportunities, but jumping in blindly can be risky. That's why we combine news with technical confluence. Step 1. Track the right news. Use the economic calendar, like Forex Factory, MyFXBook, or TradingView calendar. Filter for high-impact news only. Focus on major currencies, USD, EUR, GBP, JPY. Mark the exact time of the event and the forecast versus actual numbers. Step 2. Technical preparation. Before the news hits, open your chart. Use these tools for setup, support and resistance zones, trend lines or channels, price action candlesticks, optional RSI or MACD for divergence or overbought oversold signals. Get ready to act based on price reaction. Step 3. The reaction strategy, post-news execution. If news comes in favor of trend, enter continuation trade. If it's a strong surprise opposite the trend, wait for retest and reversal confirmation. Example entry: price breaks resistance, post-positive USD news. Wait for retest and bullish engulfing candle. Enter with SL below structure and TP at next key zone. Risk management and tips. Never trade before the news, slippage risk. Always wait for market reaction. Use tight stop loss and 2-1 minimum RR. Avoid trading multiple news events at once. Live examples and breakdown. Insert screen recording of 1 to 2 news-based trades showing how entry was taken using this strategy. Final thoughts. News trading isn't gambling. With the right plan, it's a gold mine. This strategy works because it balances volatility with structure. Master this method, and you'll never fear red news events again.